All right, so markets are higher in the notion that this was a Goldilocks jobs report, which means it gives Jay Powell more ammo to stay on the sidelines. I don't know if that makes sense. But you know what? Here's the interesting thing. The Atlanta Fed, they're not buying the hype that this was so great. They just lowered second quarter GDP to 7.8 from 8.6. At one point, it was 13%. Folks, I continue to think that you've got to stay the course. Yeah, maybe you've got to be nimble, but let the fundamentals be your guide, right? Follow these individual names and forever ignore the emotions of the crowd, the media, and your own anxiety. I want to bring in Mahoney Asset Management's Ken Mahoney. All right, Ken, the broad market doing really well this week, and it's pretty clear growth has regained some of that momentum. I know you pounded the table on them. Your impression of this jobs report and how it might change the sort of tenor of the market?
Look, this was the ultimate Goldilocks number. You're right, Charles. And what's really nice about it is that the 10-year is also under 1.5%. You know, we had some agita with growth in stocks. Is when a 10-year lifted, a 10-year interest rate, because then you have to start discounting earnings for growth. And by the way, you know, we're going to be in that growth lane. We understand there are some bumps and bruises, but where else going to be? Look at value a couple months ago. That was leading. Well, you had soap companies, beverage companies. I mean, how long are you going to hang in companies that are growing at 2%, 4% top line? So find us where innovation is, find us where the growth is. You know, we'll take our bumps and bruises now and then, but ultimately that's where you're going to find most investors getting back to that left lane, which is the fast lane, which is the growth lane.
Yeah, and Ken, I always tell people, you know, if you've got a certain amount of money, you want to protect it, yeah, you know what, find value. But if you're looking to get rich in the stock market, I don't see any better lane than that fast lane you were talking about, the growth lane. You know, right. One thing also that's coming back, it really seems like it might even get a little bit more concerning is volatility. How do you personally deal with that? You know, let's just start saying because it's been a relatively calm market. One day it's value, one day it's growth. But if we get very volatile, how would you deal with it?
So right now, the volatility, the VIX index is sub 15. Charles, this reminds you of 2017, at least this part of the market cycle right here, where we had low volatility, the wind at our back, gently going up. I don't know if gently is a good word today, but going up quite a bit. Look, at some point, the storm's going to come back again. The clouds are going to get dark. And the tell will be the VIX. I mean, that's the things we use in our models. And when that starts going up a little bit, that's when you take chips off the table. But the way things are right now, my friend, we should be risk on, as much risk on as we can, because you don't find too many great environments like this where you have VIX under 15.
Where's your favorite? Do you have any new ideas since we last spoke?
Again, QQQ, again, I know that's not a new idea, but it works, and you continue to stay with things that work. And XLB is a little bit out of favor. That's materials. Right now, again, we're talking about Goldilocks, not really talking about inflation, but we'll get some hot numbers, Charles, and you're going to want to have some material companies. Those companies like DuPont, Chemical, those type of companies, they actually make things, Charles, but they can actually raise prices. So you want to find those companies when inflation comes back a little bit, some hot numbers, and money will flow into those companies that certainly can actually raise prices.
How important is it that the infrastructure bill go through to help those material stocks?
I think quite a bit. I think it's highly correlated to that. But I think there will be a deal. I think both sides, while they disagree on everything, I think they do believe we should get some money into infrastructure, whether it's the 5G network, roads and all those type of things. So, yeah, the market and those materials are relying on that. But I think it will happen. I think there will be a deal.
Your greatest concern right now, I mean, what gets you to maybe start rethinking what you believe deeply right now?
So God forbid the variant becomes worse than we think, and we start going to shutdowns. I mean, God forbid a line came across the wire and said, this city's shutting down or this state's shutting down. The market would sell off and ask questions later. So it would be pretty dramatic. I hope we don't see that. Other than that, it would be, again, tipping the hand from Goldilocks to higher rates, higher inflation. But the one that would actually keep me up all night, and again, we keep reading about it and hope it's not going to come back. But we don't need a boomerang of this virus. All of us kind of put that behind us. God forbid this becomes something worse.
And I got just 10 seconds, 15 seconds. Are you fully invested right now, Ken? Is it you got the pedal to the metal right now?
Pedal, yeah. The way the VIX is, the way the 10-year set up, pedal to the metal. We don't get these conditions that often, my friend. It doesn't happen that often.
I agree. You know, people waiting on the sidelines for the perfect time. This might be it. Ken, have a great 4th, my friend. Yep. All righty. Well, the market